Welcome back, guys. Good to be back with you. It's the Part-Time Trader, and today we are going to be taking a deeper look at what I think is quite possibly one of the most exciting charts in the world, and that is RIOT Platforms. Historically a Bitcoin miner, but increasingly big noises about RIOT moving into the AI space as well. Over the next half an hour, I'm going to talk you through why I think this asset is set to change my life, how I am planning to take advantage of what looks like an incredibly bullish macro setup, and why I've flipped so heavily from being one of the biggest bears in the space to being somebody who's taking a slightly more nuanced view on markets and definitely excited about the potential for small cap and mid cap US listed equities in this AI space as we head into what I think will be the climax of a historic bubble that will, at least in the rearview mirror, will at least rival the kind of price action that we saw in the late 1990s through the internet boom and the dotcom bubble. So if that sounds interesting, stay tuned. Casual reminder, as always, that none of this is financial advice. I'm a random guy that you've seen on the internet who posts interesting ideas and thoughtful technical analysis, but please don't make any financial decisions off the back of anything that you see or hear from me. And if you haven't done so already, please smash the subscribe button and hit like if you find any of this content useful. And do head over to @PartTimeCharts on X for more regular updates from me. Right. Let's take a look at RIOT. So I mentioned that this is known in recent years as a big Bitcoin miner and has some of the most volatile price action that you can find out there in the market. I mean, just look at, if you go back, sort of 10, 11, 12 years, just some of these moves, 95% decline, and then a huge 27x move to the upside. Back here, if you were lucky to be buying these lows during COVID, over the next year, you would have made 150x returns if you were able to sell near the top. So the potential, even if you only scalp part of one of these moves, the potential, if you're on the right side of a big breakout in RIOT, is absolutely massive. And what's interesting to me, the first thing that really stands out is if we pull up BTC against RIOT, is you can see there's such a tight correlation. Let's switch this to log. There's such a tight correlation between the tops and bottoms of the market. So, the late 2017 top on Bitcoin was matched by this kind of parabolic move to the upside on RIOT. And then what ensued afterwards was a major, major decline before the market picked back up. And again, we're seeing bottoms and peaks at the same time. But what's really interesting is that from 2022, late 2022, when the Bitcoin market bottomed, Bitcoin has been on an absolute tear, going from 16,000 up into the space that we've seen recently in the sort of $120,000 region. And during that time, RIOT has got absolutely nowhere near the highs that we put in back in 2021. So you would have expected that by now, we would have seen RIOT at new highs, matching the kind of price action that we've seen on Bitcoin. But that hasn't happened. Price has been consolidating in this sort of falling channel, descending wedge, before giving us a big breakout last month. And that big breakout is the first reason that I'm super excited about RIOT. So the fact that we have been going largely sideways during a time when Bitcoin has been absolutely booming just leaves me intrigued. And now that we're breaking out of this big bullish consolidation, I see nothing stopping us from seeing the kind of move that we've seen a couple of times before. First back here in 2017, when as Bitcoin was soaring, we saw this downtrend break and RIOT put in a gigantic move to the upside from about $4 to $48. And then again, back here in 2020, as Bitcoin was bouncing back post the COVID crash, we saw a break of this downtrend on RIOT. And what happened in the space of literally not much more than about 6 months was a huge move from $2.50 up into the $80 region. And so we know that when you get these breakouts, technically they can be really strong signs that Riot is about to fly. And what I also like about this, and I've posted this on X a couple of times, is that if you zoom out far enough, and this is a 2-week chart, let's take a look at the monthly. This does start to look like a complex inverse head and shoulders pattern. And now head and shoulders patterns are not normally my favorite. They tend to be a bit of a meme. I think when you get into technical analysis, one of the first patterns that you start to see everywhere are head and shoulders or inverse head and shoulders. And often, they can morph into something else. But I'll come on to a bit later the reasons why I believe that, yes, this may be a bit of a meme pattern, but in this instance, I do genuinely believe that the inverse head and shoulders pattern could lead to ridiculously high prices for Riot over the next year or so. And one of those reasons, just from a technical standpoint, is if you look at this trend line here that has capped price going all the way back to 2012, this trend line has been hit 1, 2, 3, 4 times already. If we come back up and we retest this sloping trend line, is it likely to break? I think the more times you hit a trend line, and you see that here, we had 1, little bit of a miss there, but 2, 3, and then the 4th time, this huge downtrend broke to the upside and led to a really big move here, 10x for Riot. I think we may well see something similar play out here. And who knows? I mean, I've got this as my first target, and that seems ludicrous enough, right? The $1,000 region. You've got big support and resistance here. But who knows where this could stop if we get a break of this macro pattern in the next 6 to 12 months. It could be a huge move ahead for Riot. And I'll come back to Riot in a moment just to explain why I think this is not just a technical play, why I think there's possibly more to consider when you're thinking about the size of the kind of move that we might get on Riot. But to paint a picture of what that looks like, I think we need a bit of wider context from the market. And I promised in the opening minute to just explain why I flipped from being a massive bear on the market. At the end of 2024, we were here and I was calling a top on the NASDAQ. Lo and behold, what happened over the coming months was we got this huge move. I think it was on the NASDAQ, it was about a 20% drawdown, 25% drawdown. So I was right to be bearish here. And the first leg of the big correction played out. I'm going to be totally honest. What I expected to happen was a bounce and for the market to eventually top out, maybe after taking these highs and roll over. And obviously what has happened since, going back to sort of late spring, early summer, is that the price has just continued to grind higher. And I see lots of people on X calling this a sort of megaphone top pattern and expecting price to roll over and eventually, for us to get the big correction that quite a few people are calling for. And the reason why I flipped is there's a few aspects to this. Firstly, from a technical perspective, there is nothing inherently bearish about this pattern. These kind of megaphone trends often work as continuation patterns, and so it would not surprise me at all. We could get a little correction, but ultimately we'll flip this and price could go up quite significantly. So that's the first one, that this could just be a continuation pattern, and calling for a top here feels premature. Equally, calling for a huge blow off, you might say, is premature because we haven't yet broken the upper boundary of this pattern. But for now, I think let's maintain a fairly balanced view on the market, that in my view this is neither bullish nor bearish, and then we need to look for other clues elsewhere to tell us where the market is likely to head. And one of those places I would suggest should be looking at the longer term NASDAQ chart. And I've been toying with this chart for months. People who have followed me for a while know that when I was calling for the market to drop and pull back at the end of 2024, I thought this might be the top and that one more retest of this uptrend was likely to break, given how long this uptrend has held price and supported price for. So I was expecting price to come back in and eventually for price to collapse, but that hasn't happened. And one thing that has really bugged me since, when I'm looking at the NASDAQ chart, is that there's something missing from this move here, and it is the kind of blow off top that we saw in the late 90s. So again, smaller time frame, but what we saw during the dot-com bubble was similar price action in that this uptrend held the Nasdaq up as support for multiple years from 1994 all the way through to 1998. And eventually what happens when you get compression along a trend line like this, you get this kind of uptrend and prices bouncing off of it. What often happens is that the grand finale is a huge move to the upside, a big spike off of the trend line that then gets reversed and price collapses. And we saw that back in the late 90s, where by early 1999 price was consolidating here, much in the same way that we've had here, where by and large I know we've had some volatility, but price has largely gone sideways for quite some time. And eventually, as price starts to grind higher and higher, you get this kind of euphoric price action where the bears give up. The bears realize that they were early. Everybody piles back into the market, and you get the kind of blow off top that you saw here at the end of the dot-com bubble. And I am expecting something similar to play out now. I think the market is fundamentally broken. I think from a fundamental perspective, the economy is screwed. I think people are right when they say that this will be a sort of debt-based collapse, that fundamentally there are major challenges with our economy. The bond market is signaling big trouble ahead. But I just think that the bears might be early. And I have obviously been one of them until very recently. But do you know what? Yes, I have been a bear since late 2025, and the market is nominally higher. I mean, I jumped out of the market about 22,000. We're now at 24.5, 25. So yes, I've missed a bit of upside, but what I did during that time, and many people who have followed me for a while know that I rotated quite heavily into silver and gold miners, and some of those are up multiples this year. You've got stuff that has gone up 200, 300, 400%. So I don't regret getting out of the market here and rotating into some of those other assets. But what I think might happen is that silver and gold are starting to feel a little bit like a consensus trade. And I believe that they have a lot higher to go over the coming years. But I do also believe that we could be in for a cooling off, if you like, in the commodity space, a pause, maybe a small correction that will allow the Nasdaq to run dramatically. And during this peak, that is when there are huge gains to be made. So if you have missed out on price action to date, if I'm right, then there might be opportunities in the market. And for me, one of those is RIOT. And so when I first spotted this potential breakout a couple of months back, I remember trying to bring together in my head my theory that the Nasdaq was on its last legs and was about to crash. But RIOT looked like, from a macro perspective, looked like it was about to push much higher over probably a period of sort of 12 to 18 months. And I couldn't work out how to bring those two ideas together. So I was thinking maybe what we'll do is get one last swipe at this sort of trend line here, come out and take these highs, and then price collapses. But from a macro structural perspective, that doesn't quite make sense, because if price collapses from here again, that will be the 5th time that we've tapped this trend line. And trend lines often get weaker the more times that they are hit. And if I inverse this, I mean, if you were a bear, you know, you'd on this kind of market, you know, I would applaud you, because this does look destined for a massive collapse to the downside. And so for me, I'm looking at the Nasdaq, I'm thinking, right, could it last another year? Could we get the kind of blow off move that we saw back in 1999? What would that mean for stocks? That would probably mean that at the very least, some of those that have produced incredible gains like Netflix and Meta, etc., in recent years continue to hold up. Potentially they've got a bit more upside in them. But what happened, interestingly, in late 1999 is that the real gains were not in the stocks that had already gone up, like Microsoft, where you'd just had years, you know, over a decade of ridiculous price appreciation. You could go all the way back to 1989 when Microsoft was trading at 40 cents. And by the time we hit the peak of the dot-com bubble, we were trading at 58 cents. So you had something like 150x gain during that time, which is just absolutely insane. The space of a decade, if you were an early investor in Microsoft in the late 80s, you did incredibly well out of your investment in this stock. But what's really interesting when you dive into the price action is that you see throughout the 90s, as the dot-com bubble was forming, Microsoft pushed higher and higher and higher and higher. And you got this massive gain from, even just in the early 90s, we were trading at $2 all the way up into the $45 region by the time we hit early 99. And remember that the big blow-off move in the NASDAQ didn't start until early 99. But what's interesting is that during that blow-off move, Microsoft largely went sideways. So early 1999, everything else, the NASDAQ and lots of other small caps and mid caps in the market are starting to take off and put in astronomical gains, which pushes the overall value of the index, the NASDAQ, up into a region that previously would have felt ridiculous in a really short space of time. So in the space of a year, the market went up from $2,000 to just under $5,000. But largely, Microsoft, which had done this huge move beforehand, just went sideways. And yes, right at the very end, you got this quite big monthly candle where the market went up 30%, and then that was reversed at the peak of the dot-com bubble. But the point I'm trying to make here is that the stocks that had performed incredibly well for the years preceding the blow-off top, actually, some of them, like Microsoft, hadn't really moved very much during the final phase of the blowout. What moved were stocks like this, and this is Qualcomm. And again, remember, this was all about technology, the internet, the transformational impact that new technologies were going to have on the economy. And so when you get to the final phase of this gigantic bubble, a lot of these companies that had, let's be honest, had fairly lackluster price action during the 90s, while everything like Microsoft and others were booming, stocks like this were just standing still largely. But what happened is speculative buyers stepped in the final throes of this market and drove some of these assets like Qualcomm to ridiculous valuations. I think if you look at the sort of scale of the move that you've got here, January 1999 until December 1999, you could see a 30x return on your investment in Qualcomm. Now, obviously, what happens up here is that everybody gets euphoric and everyone holds. So very few people made it out at the top of the market. But the point is that this kind of ridiculous move, nobody would have anticipated this back in late 99. Everybody would have been calling for an overvalued market, for a correction. Lots of people would have been calling this a bubble. But if you were in the right stocks for that final thrust up, as the NASDAQ went from $2,000 to nearly $5,000, if you're in something like Qualcomm, these were life-changing gains. And even if you didn't grab the top, let's say you sold after a sort of 40-50% decline, you're still talking about a 10x move. So the point I'm trying to make is, yes, we could be in the final throes of the biggest bubble of all time, but that doesn't mean that the market cannot produce the kind of life-changing gains that you would have seen in something like Qualcomm back in 1999. And so for me, I have to be open-minded about what the market is telling me, what the charts are telling me. And when I look at this chart, it is a beauty. I'm sorry, but this is the kind of chart that you just dream about, right? So you've got an asset that is typically very closely tied to the price of Bitcoin, trading at a discount relative to Bitcoin's valuation, because we know every time Bitcoin has made a new high, so too has the price of RIOT, except for in 2024, 2025, where RIOT is languishing down at these levels that are still a long way off, the highs that we saw in 2021 when Bitcoin last peaked. And then in addition to that, you've got this massive breakout, this technical breakout here, this huge inverse head and shoulders pattern that seems to be playing out, and a trend line that just looks tapped out, that has been touched 4 times since 2012, and I believe another tap will break it. And so is this, when I look for candidates for the sort of Qualcomm type move that I've just highlighted that happened in 1999, And this looks as strong as they come. But there are others too. I look at something like NEO, and I've charted so many times over on X. You can see I've charted things like Alibaba, the Hang Seng Index. There are lots of reasons to believe that Chinese HQ'd companies are in the early stages of a big move rather than the late stages of a market that is topping out. And NEO is one of those stocks that really exemplifies why I hold that theory. And that is because you can draw this trend line multiple ways. You could draw it like this, and it looks like we had a breakout back in August. But even if you were the most generous of bears and you drew it like this, it just looks like we are breaking really significant downtrends that have held since all the way back in early 2021. So we're talking nearly 5 years of downward price action for NEO, a massive multi-year trend line break, the end of a big accumulation phase here. And to me, this doesn't look like a market that is about to top out. So everybody calling for the top, saying valuations are ridiculous. I can sympathize if you're looking at things like Netflix and Meta and Nvidia. But even so, there are signs that the market just wants to push higher. And I still believe there is cash on the sidelines. There are people that in this final phase, if we do get, the kind of break to the upside that I'm talking about, something that looks analogous to 1999, something like this, I think it will force a lot of capital off the sidelines. And stocks like NEO, which look undervalued, which have been through quite disastrous price action for the last 5 or 6 years, while everything else has been booming during that time, I think these are great candidates for big moves. And you can see the kind of price targets that I've set. If I'm right and this lasts for another year or so, I do think we could see the previous high, at least on NEO, going back into that $70 region, which would mean from where we are a 10x gain. And if you need proof that this is possible in this market, you only have to go back to 2020 after the COVID dip as markets started to bounce. Look at the kind of gains that were made on this breakout here. You're talking about a 14x move in the space of a year. So I know these kind of gains sound ridiculous, and I get accused all the time of being hyperbolic, of being way too bullish and way too bearish in terms of my predictions. But I just think there's something special about the moment that we're in that only happens once every 20, 25, 30 years, where you get the culmination of multiple different forces all pulling in the same direction to produce a really seismic move in markets. And I believe that that's where we are today. I believe that this looks something like 1999, and that the narrative around artificial intelligence, around new technologies is going to get to a point where people will say, look, everything is overvalued, but that's the old paradigm. Right, you're looking at valuations with an old school sort of lens, and you're not taking account of the truly transformational impact that some of these new technologies, electric cars, artificial intelligence, are going to have on economies. And therefore, your models are just outdated, and you need to get used to the fact that stocks are overvalued. This time it's different, people will say, and that kind of attitude will drive prices much, much higher, and will drive RIOT, I believe, potentially into this $1,000 region. Now, will I be holding all of my RIOT holdings until we get up to here? Probably not. I might take some profit here. But equally, this looks like an incredible buy at the moment off the back of this breakout. And I do plan to hold at least for the coming months until we reach this trend line. And I think risk return from my entry down here in the sort of $14 region looks incredible, because yes, we could break lower from here, and if we break back into this, that will be into this descending channel. That will be a sign that maybe I was wrong. But from my entry down in the $14 region, that would be a small scrape of a loss compared to the kind of upside that might potentially be in front of us if my theories are correct. And remember, one thing I haven't really touched on is that Riot is a Bitcoin miner, and that's what everybody knows this stock for at the moment. And there are reasons to believe that that could be incredibly bullish for Riot over the coming months, because Bitcoin is sitting at all-time highs and Riot is not. So this could be a great catch-up play for crypto enthusiasts. But there's another narrative that I think will drive this stock much, much higher. And that is that Riot recently have begun talking about transitioning their data and technology infrastructure into a business opportunity in the AI space. So rather than solely being a Bitcoin miner as they are today, they're talking about leveraging their expertise, their data centers, their computing power to drive the AI revolution. And I think it's that, we are sitting, I think, at about something like a 7 to 8 billion market cap at the moment. But I think it's that narrative that could push us to ridiculous valuations. And, if this were to peak up here, I think we'd be at about something like a 300 billion valuation, which would be crazy. But in a world where everybody will be talking about the transformative power of AI to completely shift the way that we conduct our lives, the way that the economy works, I think there will be lots of people as we get up here that will be saying even this is cheap, that this is a future $5-10 trillion company. The valuations are going to get stretched, the sentiment is going to follow, and people will be bullish right until the very top. And before you know it, at some point, and it doesn't need to be here, but at some point this all comes collapsing back down and we get a major sort of 90-95% correction in the market. But that is a long way off in my view. This looks like the early stages of an uptrend rather than the end of a bubble. But what does that mean for Bitcoin? So I'll tell you what, let me start with this. So look, I'm still bearish on a high enough time frame on Bitcoin. And I think people find that hard to get their head around because I flipped into a bull on equities. I believe the Nasdaq is heading for a blow off top. I think something like Riot could produce life-changing gains. And I'm also, if you head over to my X feed at Part-Time Charts, I'm also really bullish, short term at least, on stuff like Doge and Litecoin and a few others, Chainlink being one of them. So people are struggling to get their head around, why is it that you are so bullish on some of these alts in the short term, you're really bullish on Riot, but you still believe that Bitcoin is topping out? And the first thing I'd say is it could take months for Bitcoin to truly top out. I think we could largely go sideways for about a year and continue to distribute up here. I am not, however, anticipating that Bitcoin is going to boom in the same way that some of these small cap tech stocks will. And there are many reasons for that, and some of them I've posted about ad nauseum, so I'm not going to repeat myself. But this is the Grayscale Bitcoin ETF Trust. It was the forerunner in the ETF space dating all the way back to 2015, 2016. And I love the price action on this because it's so clean, and this looks to me like a gigantic rising wedge that eventually will lead to a massive move of 90 to 95% to the downside. And I've been, unashamedly bearish in my predictions for Bitcoin. I think at some point over the next few years, you will be able to buy a whole Bitcoin, I should say, for less than $10,000. And this chart is one of the reasons why, because I think this uptrend is going to collapse at some stage. And this trend line that has been capping price since 2017, 2018 is going to continue to do so. And so price action looks clean. Yes, it's possible that we could do something like what we saw back in 2021, where we get an initial move down on Bitcoin and the Grayscale ETF while the stock market pushes higher. And you can see that here, that Bitcoin peaked, and so did this ETF in early 2021. The Nasdaq during that time just continued to press higher and higher, and Bitcoin bounced back but wasn't able to significantly breach previous highs before everything rolled over and collapsed in 2022. And so you have to be open-minded. Yes, Bitcoin is heavily correlated with the Nasdaq, but is it possible that we see something like this, that we just go sideways for many, many months before price gives us the big drawdown that I've been predicting? Absolutely. Is it possible that we do something like this, where over the next couple of months we get a massive decline and then we bounce back, everybody gets excited, only for the market to roll over when the Nasdaq eventually drops? Either one of those are big possibilities, and I would caution against getting drawn into a view that because the Nasdaq looks good for more upside, that Bitcoin is going to produce parabolic gains. We are 10x or so up from the lows of 2023 on Bitcoin. We are at the end of the second year post-halving. Historically, that has not been good for Bitcoin. And if you look back, price of Bitcoin has historically topped out in Q4 of the year after the latest halving. You saw that with the halving in 2016, late 2017, price of Bitcoin topped out, and you saw that again in 2020, 2021. So there are lots of reasons to believe, in my view, that we are at a peak that is likely to hold for a long time and potentially give us the conditions for a major drawdown in the market. And I just want to throw this up very quickly just to wrap up. This is the Bitcoin versus Nasdaq chart, and you can see that since 2023 we've been in this strong uptrend versus the Nasdaq. But what's happened is that this uptrend has now been broken, and this key level here, which was the high of 2021, was initially breached, and now we've gotten back under, and this starts to look like a big deviation on the 2 weekly or the monthly chart. And normally what happens is if something holds as resistance, you get a breach above support, and then you get a breach back below. This sort of retest area here is normally a great place to be thinking about a short. And with Bitcoin, this doesn't mean that we can't see some new highs in USD terms. I still think Bitcoin could go to 130, 140,000 before rolling over. But my view is that on a high enough time frame, the Nasdaq is going to outperform Bitcoin for quite some time. This price action is not positive at the moment. If we were to reclaim this trend line, then I'd say, yep, the bulls are in charge. But right now, it looks like Bitcoin bulls are going to be disappointed about the kind of returns that they're going to get versus the wider stock market, in particular the Nasdaq, which is obviously going to be the sort of driving force of any technological revolution that people are going to get excited about. So in summary, Bitcoin and this Grayscale Bitcoin ETF, to me, still look like they are in the latter stages of an uptrend. Bitcoin looks like it's going to underperform the Nasdaq for some time. The Nasdaq looks like it's missing the kind of big blow off top that we saw in the late 90s. Lots of people are bearish on the stock market at the moment, and I think they're about to be punished. And in the short term, we're trying to find the stocks that might give us this kind of move that we saw in Qualcomm back in 1999, the latter stages of a market that had produced phenomenal gains for many years. If you were invested in something like Microsoft in the 80s and 90s, you were very wealthy by the time we got to this market peak in 1999. But what happened in 99 was that some of these stocks went sideways while things like Qualcomm absolutely boomed. And so RIOT and NEO look like two fantastic candidates for those kind of gains, and I'm positioning myself accordingly. Now, as I always say, none of this is financial advice. You need to do your own research, make your own choices, but I'm here to present ideas, to talk you through how I'm thinking about the market. I hope some of this was useful. I am long on RIOT in a big way, and I'm hoping that this is going to give me the kind of the kind of gains that people were chasing in the late 90s. I just hope if they come, I'm smart enough to not buy into the euphoria and the hype, and to exit the market at a sensible level, banking some serious gains. If you found any of this useful, interesting, entertaining, even amusing, please do hit the subscribe button. I would love to have you on board for future videos and help me to grow the channel. I really appreciate your support, guys. Have a great week, and let me know in the comments if there's anything that you would like me to cover in future videos, and I'll do my best to respond to those requests.